You're listening to the Option Alpha podcast from OptionAlpha.com, where we show you how to make smarter trades, learn how the stock market really works, and generate consistent monthly income. Now, your host and head trader at OptionAlpha.com, Kirk Duplessis.
Hey everyone, this is Kirk here again at OptionAlpha.com, working every week to make this the most popular investing podcast offered online because it's based on one thing and one thing only, and that's helping you make smarter trades. So again, thanks so much for tuning in today. And right off the bat, I have to request, because I get a lot of emails from people who say they listen to the podcast, they enjoy it, they love all the free content that we're doing. If you are loving the podcast and loving all the things that we're doing here at Option Alpha, one of the ways that you can give back and help me is by offering up an iTunes review or review anywhere that you listen, on Stitcher, on Google Play, on iHeartRadio, because we're now in iHeartRadio. It takes literally 2 minutes, but it really means the world to us. And we have way more downloads and unique people who listen to this podcast every single week than we do have iTunes reviews. And again, so it's another way that you can help us by just giving up a quick testimonial or review about what you think about the show, if it's been helpful or not, what you love about it. And again, it would go a long way for us in just reaching more people through iTunes and some of these podcasting platforms. Now, in today's show, I think the title is kind of cool. And I actually got the title from another person that's in one of my mastermind groups because they did something similar in a blog post. And so today we're going to go over the 15 and a half avoidable mistakes that options traders are making right now, because the reality is that I've made a lot of these myself. And so I'm not here to preach to the choir, being that, I've not made any of these mistakes before. Yes, there are things I've made mistakes on before in the past, and some mistakes that I keep, reoccurring and making all the time. And it's so my goal is obviously to get these out there so that, one, I don't make them anymore and I just have a little bit of accountability to myself, but also two, it might help give you a little bit of framework of what I see from the 36,000 people that we have now in our membership program as to reoccurring themes or problems that people are making, or avoidable mistakes that people are making right now. So we'll get right into it here and talk about mistake number one. And mistake number one is not enough time. And this is one that I see all the time. And it really is like my biggest pet peeve in this business is I hear all the stinking time that people say, I don't have enough time. I don't have enough time to do it. And the reality is that you do have time. You're just choosing to do other things besides learning how to generate income, increase your wealth with options trading, or whatever it is in your life that you want to learn how to do. You do have enough time, but you're doing other things. You're not sacrificing the time that you spend watching Game of Thrones or watching, whatever, Grey's Anatomy or football or baseball at night. Like, take 30 minutes a day and learn how to do something that is going to increase your wealth, increase your income exponentially into the future. I honestly believe, and I've said this a billion times, people work too daggone hard for their money. You work too hard for your money not to invest 10 minutes a day, 30 minutes a day into learning how to build wealth from the money that you already have. See, everyone always tries, they want to build wealth, they want to increase their income, but they think that they don't have enough time. So my goal for you today is to choose one thing that you're going to give up in the evening or in the morning before work or after work, and invest a little bit of time into your financial education. Just one thing. Give up a show, get up 30 minutes earlier, don't watch news in the morning. There's a billion things that you could do. So that's number one. Avoidable mistake is you don't have enough time. Completely avoidable. You can make time. Number two is you won't do the homework. Now, this is, again, going on line with number one, is that a lot of people that get into this program, and even many systems online or many coaching programs or education platforms online, don't frankly want to do the homework. And I don't know what it is. And as a father now of two girls, and my wife is a teacher, by the way, as a father of two girls and with a wife as a teacher, this has never been an excuse for me, because what am I going to say to my girls when they come home from school one day and they have a really tough homework assignment? Maybe it's math or, science or whatever the case is. I'm going to say, you don't need to do the work, right? Like, you can get the result without putting in the effort. No, of course not, right? We're parents. We're never going to tell our children that. And so we often say that to ourselves in a way, subconsciously or even consciously. You think to yourself, I don't want to do the work. I know it's a lot of work. I got to learn all this new stuff. There's all these acronyms to learn. Of course it's work. That's what it should be. It should be a little bit of work to understand how to do something that could potentially change the whole outcome of your life and your financial future. Of course it's work. Please do not use the excuse of, I don't want to do the work or the work's too hard, for not having the ability later on to generate more income, build more wealth in your portfolio. So an avoidable mistake is do the stinking work. Yes, it's going to take a little bit of work. For some of you, it might take a little bit more work than others. Other people might grasp it very easily. So like a lot of people who get into our program that have a background in finance or engineering or mathematics, yes, that's a lot easier for them to understand how we calculate probabilities and statistical outcomes and all that other stuff. But if you're not in that field, it means that you got to do a little bit more work, right? And so I think that it's a cop-out to say that you don't want to do the work or that it's meaningless. It's important to do the work to get where you need to go. Number 3 is prayer and revenge trading. Another thing that I see all the time, and one that I've been guilty of myself. And this is where you see a trade that goes against you, and you either put your hands together and pray to whoever you pray to that the trade comes back around, or you revenge trade, which means that you fight the trade and you assume that you're right and you like force your mentality or your perspective on the market and you say, this trade's going to turn around. I'm going to double down now because, it's going to. Like this thing has to, you get like, almost like in a confrontational mode with the market. And this is really bad for a couple of reasons. Doing this prayer revenge trading is bad because you basically remove all type of logical thought when you start getting into this framework or this mindset, right? Now you're not thinking about the numbers and the probabilities and the expected outcomes. Now you're truly becoming an emotional trader. And we all know that we usually make really bad decisions when we're really emotional on one end of the spectrum or not, right? If we're really greedy or really fearful, we end up making really bad decisions. And the other reason that this is really bad is because it sets a precedent for you that every time something goes bad, the only way to counteract that is to be overly emotional and overly fearful or overly hopeful for something to happen. And what you do is you naturally, in your mind, remove any sort of control that you thought you had based on the numbers. So like when I trade, I know that if a trade goes against me, it's just part of the game. It's just part of the system. I know when I do a high probability trade that I'm not going to win 100% of the time. But many of you who are out there think that high probability trading equals 100% winning trades, and it doesn't. So when I have a bad trade, I don't fight the trade. I just emailed somebody today that had a bad trade, and they said, hey, I made a bad trade in GILD. What do I do? And I say, you move on. You move to the next trade. You take what lessons you learned, move on to the next trade, and try not to recreate that situation or that environment where you were greedy, fearful, emotional, whatever you want to call it. So I think this aspect of prayer or revenge trading is really, really harmful. A lot of people fall into it. I've often fallen into it myself, but now I'm definitely past this in my own trading and kind of education here as a professional trader on my end. Number 4 is the I'm right trading mentality. This one drives me crazy. This one drives me crazy for a couple reasons. And one, because people will be shown the numbers, like what we're trying to do here at Option Alpha with everything that we do in the back testing, the IV versus historical, all of that stuff that we try to show you guys, prove the math to you. And still, we get people who think that they are right in their mentality of buying options or buying straddles or buying strangles. And it drives me crazy because that, again, that mentality that you get into where you're so hell-bent on being the person who's right versus being the person who's profitable really sets you up for failure along the way because you end up just forcing your opinion on the market time and time and time and time again. I often equate this to people who try to mix oil and water a lot. Like if you try to mix oil in water, it never mixes, right? Like it can disperse, but then it comes back together and it never quite, mixes or dilutes in water. And there's a reason behind that. There's an underlying, scientific principle behind why that never happens. But the people who just like, oh, it's got to work. And they just keep stirring and stirring and stirring. And they just try to mix it. And it never dilutes. And that's the type of mentality I see a lot is this person that, no, I'm right. I know I'm right. If I just, give it enough time, give it enough whatever, like all these little reasons, but the math never checks out. And so I think that you got to get over that early. You got to look for the mathematical principles, the systems that are in place that really show you how to make money and not assume that you're right and then force it in. Number 5 is you grab the biggest bad. Okay, so this is another one that I see often happen when people come into our coaching program is that they basically are trading with a lot of money at one time and they think that they see a really good setup. And no matter how good the setup is, they then assume that if I just allocate 20% or 25%, basically grab the biggest bat I can find and take the hardest swing at this thing that I can possibly take, then I'm going to be successful. And more often than not, you end up missing, right? You take a big swing at a, huge opportunity. You think it's the opportunity that you're going to have, and you completely wolf, right? But the reality is that financial independence, wealth building, income generation, however you want to determine it, is a series of small individual steps along the way. It is not one big swing at the plate. It's not stepping up and saying, this is my one pitch, this is my one opportunity. No, you get thousands of opportunities, and it's the ability to take small chips or small swings at all of these little opportunities along the way that eventually add up to a big outcome. So again, do not grab the biggest bat. Don't over allocate your positions. Don't assume that this is the one and only opportunity. There will be more opportunities coming up. Number 6 is you don't flip the coin enough. This kind of goes along with number 5 here, and this idea that in options trading, it's all about the statistical or mathematical outcome of what we're trying to do. And what I mean by that is that if you are trading a 70% chance of success trade, you may not have 7 winners and 3 losers after the first 10 trades. After the first 10 trades, you might have 5 winners and 5 losers. That doesn't mean that it's not working or that the system is broken. It just means that you haven't done enough trades. You haven't had enough occurrences or outcomes or coin flips, as I usually say in some of the training videos. You've got to be in the game long enough to see the probabilities actually work out. And they work out more and more towards the expected outcome the more and more you trade. So you get from 10 trades to 100 trades, you're more likely to see about 70 winners and 30 losers. You get to 10,000 trades, you're probably really likely to see 70% winners and 30% losers. But a lot of people get started in here, and I often say this to pro and elite members when they join and we have an onboarding webinar with just those people live. I say you've got to be in this game for more than a month or more than 3 months. It is a long-term game. It is not a game that you can assume you're going to get into and assume that you're going to make money the first month. But I guarantee if you're in the game long enough, if you stick with it, you will make money doing the right thing. It's just a matter of probability and expected outcome. It's going to happen. It just might take a little bit of time to get there. Number 7 is people have trouble being consistent and persistent. If you've listened to me for a long time, you know that my 2 favorite words in this entire world, business, options trading, family, relationships, everything, is being the person who is incredibly consistent and persistent. Consistent in doing the right thing time and time again. I've said it a million times, and I'll say it a million times, hopefully over the course of my life, that success to me is not about a fast track program. It's not about finding the fastest path there. It's about getting on the right path faster and then taking steps day by day, week by week to get to your goals. And again, that's, I guess, across all platforms, across all different areas of your life. I believe that you have to be incredibly consistent in everything that you want to do. And you have to do the little things day after day after day after day. And that's tough to do. Believe me, I get it. I often use the analogy of going to the gym. When you go to the gym and you want to be fit and you want to be healthy, you can't do it in a day. You can't eat right for a day and then be fit and healthy. You can't go to the gym for a day and work out for 12 hours and be fit and healthy. It takes an hour a day or 30 minutes a day, time and time and time and time again. That's the consistency aspect of how you be successful, in my opinion. The persistence aspect of it is doing those things that you know will be the game changers for you, that you know will lead to the eventual outcome that you want to get to. It's doing those things even when you don't want to do it or even when it's hard to do it. And to me, it's hard enough to be consistent. It's incredibly hard to be persistent. I find this often, just to be honest with you guys, when we have like a string of losing trades or we are in a drawdown here at Option Alpha, and of course that happens, and we're going to have it happen in the future. It's really hard for me to keep telling people time and time again, just stick with the program, right? And they say, well, we had 3 bad trades in a row. Okay, great. Stick with the program. Play the numbers, play it out, because eventually it's going to work out. We are doing the right activities. And we know that we're going to get the result that we want to get. It just takes time. And again, I use going to the gym as a perfect analogy for this. You go to the gym 7 days, right? You've been consistent. Every 7 days you're going to the gym and you're working out. At the end of the 7 days, you haven't lost any weight. That doesn't mean that you're not making progress. It doesn't mean that what you're doing won't eventually lead to the result that you're looking to get. It just means that you haven't been doing it long enough. So you have to persist through that time period where it's tough or it's challenging or you don't want to do it. You have to keep, turning the wheel and going to the gym and working out. And the same thing with trading. You got to keep making these trades month after month, week after week, because they will work out in the end. It's just a matter of time. Number 8 in our avoidable mistakes that options traders are making right now is changing assumptions. I often see people change assumptions like changing of the weather every single day. They're bullish on the market, then they're bearish. They're bullish on this, then they're bearish. They read something and then they're this, right? And my opinion on this is just have an assumption, because at the end of the day, it doesn't matter what all of your assumptions add up to. Everything is going to be about the same in the end. Often, and this will actually come out in show number 65, which is the next episode coming out next week. We're going to be doing a really cool interview with a guy named Todd from financialmentor.com. And in that episode, in that interview, we talk about the fact that modern portfolio theory with all these diversified different asset classes over time basically leads to about the same portfolio. No matter what allocation you have or what diversification mix you have, eventually leads to the same thing. So my opinion here on changing assumptions is it doesn't matter, right? Like you can change your assumptions a lot, which is, bad to do. Just have some assumptions and work those assumptions. That doesn't mean that you can't change them every quarter or week or month or year, like whatever, but just try to have some foundational assumptions that you believe in and work those assumptions. You think that, bonds are going down? Great. Play that for the next month. And again, you can still trade high probability systems and strategies around that assumption and be totally wrong in your assumption and win. It doesn't mean that your assumption is going to be the determinant to your success. So try not to change your assumptions too much. Have some core foundational underlying assumptions and then work the system from there. Shiny object trading. I actually think a lot of people actually come to Option Alpha initially. To be totally honest with you guys, I think a lot of people come to Option Alpha initially because they have shiny object syndrome or they try to chase after the next shiny object. So they tried maybe stock trading or day trading. That didn't work. So now they're going to trade Forex. That didn't work. So now they're going to trade options and they might come to Option Alpha just purely off of the fact that they are trying something new, that this is the new shiny object that they're chasing after. And that's a really bad mentality to be in because you're always chasing after something and you don't give it enough time to work. Again, it's like saying to somebody, maybe who's working out, like, well, listen, here's what we're going to do. We're going to, try lifting weights just for a day. And then we're going to try this other thing. This kettlebell thing is really popular right now. So we're going to try that for a day. But then the next time we're going to try yoga for a day. And then the next time it just keeps going on and on and on and on. And you never give something an opportunity to work itself out. So my opinion on this is choose something. If you're listening to this podcast, you've obviously chosen options trading. I think it's a great choice. I think you can keep digging in here a lot deeper and going a lot wider in your knowledge base of understanding how options trading works. So don't be deterred or be distracted by something else that may come up in the future. Stick to the program and stick to the system because again, as we've said, I feel like I'm saying this ad nauseam. It works. You just have to give yourself enough time. Number 10 is not accepting the uncertainty. This is a big one for me as a parent with 2 kids. What we started doing is taking our girls to childcare just one day a week. And this is with our, obviously our in-laws. But before we had our in-laws and we moved up to Pennsylvania, we were doing this down in Virginia outside of DC. And we would take our first daughter, Molly, to childcare with a lady that, was a referral from a friend of a family. So it wasn't that, we didn't know who she was. We kind of had an idea. We did some digging around and we used to take her to this lady for working. And so we could get some, work done around the house, etc. And so when you take a child to childcare, you can only do so much to basically ensure that they're going to be safe, right? Like as a parent, I can only do so much. I know who the person is. I've done the background check on them. They have a business license. They don't have any, marks against them. There's only so many things I can do. But as soon as I drop off my child at childcare, even with our grandparent, our in-laws or anybody else, there's a certain amount of fear that something else can happen, that there's this fear of uncertainty that they may not be safe. And I can't not do that. I can't not drop them off because I need to do, my end of, what I need to do as a father and a provider to our family and work and do, trading and all the other stuff that we do with real estate. I have to accept that there's a little bit of uncertainty. I can only control what I can control. As a father, as a parent, obviously, I have to accept a little bit of uncertainty and have to take a little bit of risk and hopefully I'm not saying like I'm taking risks with my kids, but I'm saying I have to realize that there are certain things I can't control. When it comes to options trading and the market, you have to accept that there are things that you cannot control. I mean, this even gets back down to number 3, which is prayer and revenge trading, that you have to accept that there is going to be another black swan event and that we're not going to see it happen. That's what a black swan event is. Everyone's like, how do you see a black swan event, coming? You don't. They're black swan events. You have to accept that. You can only control the things that you can control. You have to control your risk. You have to control what stocks you trade. You have to control the balance in your portfolio. Is basically out of your control. You can't control what the Fed does. You can't control who's elected for president. You can't control so many other different factors in the market. So stop worrying about all of these unknown, unacceptable, or uncontrollable fears that you have and start accepting the uncertainty and basically embracing it and realizing that you can control most aspects of your trading that can counteract a lot of that. Like I often tell people with black swan events, the way that you get through a black swan event is to not have all of your money in one position, in one direction, right? And have ample cash left over. There's a reason why we always say to people, have 50% or 40% of your account in cash at all times, so that if the black swan event happens and if all of our positions, God forbid, went really, really bad and lost all their money and all the margin that was tied up in them disappeared, we'd still have money left over to trade. That's how, in my opinion, you get through a black swan event. All right, number 11 here is high school fear. Now, this one actually is one that hits home to me because not anything to do necessarily with high school, but it's just a mentality that we often have. And I definitely struggle with this. My wife would be the first one to tell you that I struggle with this because I often will get asked, questions not only from family members, but from anybody that we end up meeting, like, what do you do? And I struggle trying to tell them what I do in options trading and running a website and with real estate. I really struggle trying to tell them what I do. And maybe a lot of it comes back down to this fear of just not doing something that's normal or doing something that's out of the ordinary, because I get a lot of, weird looks and strange faces. And they're like, what do you mean? What do you mean you trade options? What does that, what does that mean? What does that mean you run a website and a membership community and all that stuff like that? And I think that this is a real fear. And the reason that I bring this up on our list of avoidable mistakes, myself included, because I'm learning how to get over this and learning how to tell people a little bit more about what I'm doing. Although it's very easy on the podcast and videos and stuff like that and blog posts, it's hard when I'm face to face with somebody to really tell them what I do if they have no idea what options trading is. But I think that we have to all get over this and really have to start talking a lot more about what we do with the people around us, because it's important to our growth. It's important that we don't keep this in, that we don't shelter this, that we don't, hide this from anybody in our life, that we really truly tell people what we're doing, because it's important that we have that foundation and that support system around us that can help foster and develop our education. And so like what I'm trying to do is, tell people a little bit more about what I do and why I do it and how I do it. And I do have a little bit of that high school quote unquote fear of, just being a little bit of an outcast in the, the family and the community. And like, he's doing something different. Like most people just get a job and most people, go to work every day. And not saying that that's bad. I'm just saying that's definitely something that I think we all have to get over. And I think it's important to our foundational success that we do that. Now that kind of ties into number 12 on our list, which is not teaching someone else. I think this is a huge mistake. This probably could have been bumped up a little bit on the list, not that it was necessarily in any particular order, but that people do not in this business as a trader, you don't teach anybody. You come to us for education, which is great, but often people are not teaching other people that are either at the same level than them or a different level. It could be higher or lower. It doesn't matter, but you have to teach someone else. And the importance of teaching someone else is that it reaffirms all the things that you know to be true. Truth be told, one of the major reasons why I continue to run this website in this community and I respond to hundreds of emails every day from free members is because the more and more I teach, the more the foundational elements and the numbers and the math get solidified in my mind. And that doesn't mean that I don't learn from other people. I do. I learn from a lot of other people. In fact, one of the driving forces behind creating our Pro and Elite Forum so that we could have this inner communication network between all of the members at a higher level is because I was learning so much from my members, from the people who are a member at Option Alpha, that I felt like if I was learning so much from all these other people, then connecting everybody else together just means that everybody is going to be learning a ton from other people. In fact, I just went into the forum this morning before doing this podcast And people are helping each other out without I'm not doing anything, which is great for me. No doubt that I don't have to, be in there and be a moderator on every single comment and thread, but people are helping each other out. And that is incredible because every time that Scott replies to David and Eric replies to Jeremy and Chelsea helps out with, Hamal, all of this stuff helps reinforce the teaching that they're doing and the education that they learn. So my goal for you is try to find one person in your life. Maybe it's your spouse, maybe it's your child, maybe it's a coworker. Try to teach them a little bit about what you're doing. And you'll find that it's probably actually incredibly hard a little bit earlier on to do this and try to understand how to really articulate some of this stuff. But the more and more you do it, the more you'll understand it and the more concrete it'll be. Number 13 is you don't have any concrete goals. I often ask this on our free member webinar, which we do every Wednesday. For anybody who signs up new to Option Alpha, we do a free onboarding webinar. And I often ask people, what's your goal in trading? And a certain percentage of people will actually say that they don't have any goals, that they're just kind of whimsically doing it. I think it's a really bad way to approach anything. I think you have to have some concrete goals so that you know if you're going to be successful or not. And they don't have to be this long, drawn out blueprint or plan. It's just, I would like to, invest 30 minutes per day into learning. Okay, that's a goal. I would like to do my first trade after the first 2 weeks. Okay, that's a goal. Have some sort of concrete goals laid out so that you can start reverse engineering those goals and working backwards from those goals. One of the things I like to do personally, and me and my wife have talked about this on our real estate side often, is that we have a goal at the end of the year to, buy a certain number of properties. And if we know we want to buy, let's say 15 properties at the end of the year, we know that means that we're going to be buying a little more than one property per month. And if we're buying a little more than one property per month, that means we've got to write offers on much more than one property. And if we're writing offers on much more than one property, it means we've got to look at more than one property, more of the properties than we're writing offers on. And so you can take your goals and reverse engineer them down and learn and find out what activities you need to be doing on a day-to-day basis so that you get to your end goal of 15 properties a year. It's not enough to say, I want to have 15 properties or I want to generate $200 in income trading. You have to reverse engineer it all the way back. So please write down some goals, share them in the show notes page at optionalpha.com/show64. Number 14 here is you're not playing the math game. I think, for me, this is one of the ones I kind of wanted to leave towards the end because I see too many people who are just not playing the math game, who try to force trades in. And in fact, I called out a couple people, not for any malicious intent or anything like that inside of the Pro and Elite forum, but a lot of people are posting all these earnings trades that they're getting into and they're just not playing the math game. They're posting the trade, they think it's good, and other people are following them. But I had to call out a couple people and say, look, you're not doing this the right way. This is not how it's supposed to be. And again, it's not for any malicious intent. It's actually to help educate and teach and get them, on the right track and on the right path faster. But please understand that this options trading game is just a game of math. You'll actually hear it again next week in our interview with Todd from Financial Mentor, how even though he's in a completely different space, he's not an options trader by any sort, but how he realizes and understands and has made a lot of money realizing that most finance is just a game of math, expected outcome, probabilities, etc. And so if you're not playing that game already, you better get in that game quickly, because the more and more you drag this out and you push it back and you don't learn and you don't try to understand how it works, the longer you're going to take to get where you need to go. So the quicker you understand it, the quicker you get acclimated and get yourself ingrained in it, the faster you'll get to reaching your goals. Number 15 is you haven't invested in yourself. I'll be totally honest with you guys and tell you that as a business owner here at Option Alpha now, and the business has been around for about 8 years. It really only started to really generate, like an income and money about 3 years ago. So 5 years out of the 8 years was just a lot of me posting content and, trying to figure out how to do this. And even if it would turn into a business or turn into anything at all. And so I made the decision last year that I really needed to invest in, a group or a mastermind that was people like me, not necessarily in the same market in options trading or finance, but that were running a community online, running a education platform and learning how to do this. And the same thing with learning how to do backtesting and software development, which is something that we're starting to do a little bit more here at Option Alpha. And so I realized that this had to be a big investment for me. And I ended up investing about $25,000 into joining a very targeted, very high level mastermind group of other people who wanted to do or who were doing and wanted to do more of what I wanted to do. And I came into this group and I probably wasn't the lowest person on there as far as like education and what we were doing in the business and how, big the website was and all that. But I definitely was not the highest. And that's good because I wanted to elevate myself to a different level. And it took a little bit of money. And now look, I'm not saying you spend $25,000 on joining a group. I'm saying that for me, I realize and I know that every single time that I invest in my education in any way, shape, or form, whether it's buying more research for backtesting, whether it's investing in a developer who can build a backtesting, software for me, building a portfolio analysis software that we release online, any of this stuff, anytime that I invest in my education, my understanding, my learning, my company, it always pays more dividends. And so what I tell you is take whatever amount you want to do, $5, $10, and choose something that you want to invest in. Buy a book, buy a video course, join our pro membership if you want to do that. Do something so that you have skin in the game and money at risk so that you want to be successful. And I'll say this too. We do not have in our pro and elite program, and many people know this, and I'm totally upfront with this, we do not have a 30-day money back guarantee. And it's not because we don't think that it'll work. It's because we want people, as soon as they get into the program, to have some accountability to themselves. Because usually what happens is that people join a program or a system and they say, I've got 30 days to figure out if it's going to work. And what I want to say to people is I want people to say, look, I'm investing $100 into joining the program for a month, and I'm going to give it everything I got so that I get more value out of it than $100. And if I didn't get more value out of it than $100, it's on me. Right? Like that's what I want people to say. Not that it's on me, because it's not. I think I'm giving you a ton of value. I think you're going to learn a ton. There's a ton of education. You're going to get in there with a bunch of other people. It's on you if you don't get enough value out of it. That's why we don't have a guarantee, because we want you to be accountable to yourself. You owe you an opportunity to get to the next level. You can do all the free training and education you want on our free side. That's why it's all free. It'll always be free. There's no strings attached. But the second that you cross over and you say you want it and you self-select yourself to be at another level, to be at a pro or elite level in your trading, then you've got to put in the effort and the work. Okay. And so that's why I think that an investment in yourself is a huge opportunity and definitely an avoidable mistake. Again, I'm not saying you got to invest $25,000. I know guys that are in this group that invest $250,000 in other mastermind groups and be part of other, networking circles. And that's not where I'm at now. And hopefully maybe I'll get there one day. But for me, it was a big change and struggle to invest that amount of money. And it was a big decision for our family and my wife and I, but it's definitely paid dividends. It's definitely worked out. It's definitely been something that's been beneficial to me. So my 15 and a half avoidable mistake here to round out the show is that you don't have an accountability partner or coach. And I think that this is a big one, and kind of the reason why I left it for the last one. Not that it's half as important. I think it maybe is more than half important, but find somebody in your life that can be an accountability partner or coach. Use me, use another member inside the platform, use your colleague, your spouse, somebody, post publicly online, do whatever you need to do to get accountability in your life. Because when you have someone who's accountable to you, that's checking in on you, or that you're checking in with them, it keeps you on track to doing the things that you need to do to, going to the gym every single week, or, making trades every single week, and makes you accountable to reaching your goals. I often use, and again, I've used many times in this podcast episode, going to the gym. I had recently hired a training coach to get me back to the gym. I played football in college. I know how to work out. That's not the issue. It's just that I needed someone to be accountable, to be there waiting for me so that I got to the gym. And so that if I felt like I didn't want to go, or I felt not ready to work out today, that someone was there, that I was paying money, right? And if I missed the session, I still paid him, and that was our agreement. And again, that's me to, a way for me to not to, have this money back guarantee on myself and be accountable to myself. But you have to have somebody there that's waiting for you so that you are doing the right things that you need to do to get to your goals. So again, have your spouse do it. I think a spouse is a great opportunity to do it. Have a brother, a sister, a mother, a father, even if they don't know about options trading, just check in with them once a week. Tell them about your progress. Say, hey, listen, you check in with me this week, and I need to be sure that I've done, 2 hours of education and at least made 2 trades. Whatever the case is, have somebody that is accountable for your actions. Every single top professional athlete in the entire world has a coach. Tiger Woods has a coach. LeBron James has a coach. All of these people have a coach. They're the best athlete in their business. They're the best at what they do, but they have an accountability partner or a coach to keep them accountable, to keep them on track to hit their goals. And so if you don't have one, find one. I can be your coach. Someone else can be your coach inside of our program and platform, a business partner, a colleague, whatever the case is. So hopefully you guys enjoyed this little rant a little bit on the 15 and a half avoidable mistakes that most traders are making right now. I think we try to touch on a lot of different things, not only the mindset type stuff, emotional stuff, trading techniques, math, all this stuff. I think that hopefully it was a little bit of a comprehensive list. I know that at least one of these probably really speak to you. So if they do, let me know in the show notes at optionalpha.com/show64. And again, if you thought that this podcast was really helpful, please take 2 minutes to write a review or rating on iTunes.
And now our favorite part of the show, Trader Q&A, where we answer a question from one of our current members about options trading. Got a question you'd like your to answer? Live on air? Just head over to optionalpha.com/ask and hit the record button to leave a message. That's optionalpha.com/ask.
Hi, Kurt. This is Larry from Palm Beach, Florida, and I would like to ask for a podcast or video on how you go about deciding a trade, like from conception to the time you text it out, by the time you see a trade to the time you text it out. Maybe the IYR, use that as an example, just how everything came together from the time you saw the setup, what you saw, all your analysis step by step. Just maybe more of an in-depth analysis than what you send out via the text or the email. So that would be great. Thank you, and keep up the good work.
Hey, Larry, thanks for submitting your question. And so it's a good question. It's definitely a big one that we want to cover here. There's a lot of training that we do have on how we go about finding a trade, but I want to give you a little bit more specific since you asked for them here in the show today. So when I go into finding a trade and determining a setup, I think that the problem that most people have is that you get into an analysis paralysis type of mentality, thinking that there's specific setups that we're looking for. And the reality is that's just not the case. What we're always looking for is first two things. One, high implied volatility. So that's the first determinant into looking for trades. That's usually the first thing that I scan for. So whether I use our watch list right on optionalpha.com or inside of my platform in Thinkorswim, I'm always looking for high implied volatility securities first. And then the second thing that I usually look for is just what's moving big today. And it doesn't necessarily mean that second determinant, what's moving big today, is going to dictate what I do in my trades, but I just want to know what's moving, what has made a huge jump recently or just today. So like I look right now at my watch list right now and I can see Twitter's down 4% today. Okay, great. Maybe that creates a trading opportunity. Maybe it doesn't. But now that I see that implied volatility is 32 and that earnings are coming up, I realize that maybe I'll just wait for that earnings type of event to come up. So I think that a lot of people get into analysis paralysis when it comes to determining what trades to make. The reality is that you can trade anything that's out there at any point. You can trade low volatility, high volatility. You can trade any stock, any ETF at any point. It's just a matter of figuring out which option strategy works best. What we are finding in some of the backtesting that we've been doing and that we'll be releasing very soon is that when you are premium selling, when you're going to be an option seller more often than option buyer, what's more important than finding particular setups is just having a consistent framework for premium selling, whether that's every day, every week, hopefully not every month, because that may be not as consistent as we want it to be, but just having a consistent framework for premium selling. So that means that every day I'm coming in and I'm looking for new trades that I want to do. I need to make a trade today. And then from there, I have to filter out every opportunity. So if I need to make a new trade today, what's the highest implied volatility security that's on my list right now? And if that highest implied volatility security, which right now as I'm looking at my platform is YUM, ticker symbol YUM, if that has earnings coming up and maybe I don't want to trade that, what's the next highest implied volatility security? And in that case, it's EWW today for us. So maybe we'll make a trade in EWW, which is an ETF. And so from there, then we start digging into, and hopefully I'll kind of make a little break point here. Once we determine what security we just want to focus on a little bit, whether it's high implied volatility or ETFs only or whatever the case is, then from there we determine our strategy. Now this is where it does take a little bit of a shift in mentality. So everything before here was really, it doesn't matter what you trade as long as it has mostly high implied volatility if you can find it, and you just want to be aware of earnings or any kind of corporate events coming up. When you find whatever that is, now you have to determine what strategy you're going to use. Now, here's where it does take a little bit of a shift in that we want to choose the strategies that ultimately give us the highest possibility of success. when you are trading securities that have low implied volatility, it is not best. It's not the best situation to be an option seller. You can do it. You can be profitable doing it. And we've done that before in the past, and we're doing a little bit more of that now. But it's not the ultimate situation, right? So if low implied volatility is there, then you want to try to focus on the calendars, the debit spreads, the ratio spreads, etc., the diagonals, because they generally might make a little bit more money if implied volatility rises. If you're looking at a security now and it's got high implied volatility, then you just have to ask yourself, what strategy might make the best opportunity or might make the best return for me? If implied volatility is really, really high, I would say in the 70th rank to 100th rank, you want to focus on the really aggressive option selling strategies, the straddles, the iron butterflies, and the strangles. If implied volatility is between 50 and 70, then you want to kind of taper that back a little bit. You still want to be an option seller, but maybe you focus on the less aggressive option selling strategies because implied volatility can expand a little bit more. And you focus on the strategies like credit spreads, iron condors, and maybe really wide strangles if you want to go with a really wide strangle. Okay, so hopefully that makes sense how we think about that. So the back half of the trade, once you determine whatever ticker symbol you want to trade for whatever setup reason it is, it doesn't really matter. The stock could be going up, you could have some technical breakout or not. Then you just have to use implied volatility as the basis for determining what type of strategy you want to use. Okay, so hopefully that gives you a little bit more context into how we think about that. It's definitely not something that is 100% set in stone. So we don't look at something and we say, aha, 50 IV means we definitely trade this and we definitely trade this direction. No, there's a little bit of fluid movement here. This is where a little bit of art over science comes in as far as trying to understand the different strategies that we're going after. We are going to be doing a little bit more releasing of backtesting kind of stats on this as we get through the next couple weeks here. So you guys will definitely hear more about it, but we have backtested the daylights out of a lot of different option strategies. And so we are finding some of these more concrete, data points that we want to start using in the future. We just don't have all of that available right now. So I could give you like a specific answer for every particular, setup. But it is something that we have definitely backtested the daylights out of 21 million different variations of strategies. And we now have the blueprint for how we can determine what particular setups work best in every situation and environment. And again, that'll be coming in the future.
Now, the closing bell. Find out which stocks we're looking at right now, trades we're making, and hear our game plan moving forward.
All right, so in today's closing bell segment, I want to kind of maybe switch gears here a little bit and talk about a trade that we're going to be doing in TLT. Now, TLT is a bond ETF fund, and the reason that we're doing this trade is because at the time of this video, we're going to be going through the Fed expiration cycle. And in my case, I think, and I know, well, everyone knows that the Fed's not going to raise rates here in September. So at the time that we're actually doing this video and recording this podcast, and we know that they're not going to raise rates. And so as a result, I think implied volatility for bonds, I think will go down eventually, but I want to just start to build a position here in TLT, which is a bond ETF. Now, we're doing this position as an iron condor because we want to have defined risk on either side, not because we don't want to do the straddle or strangle, but because we want to make sure that it's a high price stock. It's about $140, $135 priced security. So to do the straddle or strangle would tie up a lot of margin. We can do a really wide iron condor and basically accomplish the same thing as doing a straddle or strangle. In this case with TLT, what we're going to be doing is selling the 140, 145 call spread. At the time we're doing this video, bonds are trading about 135, or at least TLT is trading about 135. So we're going to be doing the 140, 145 call spread. That starts with our short strike about $5 above the market. On the put side, we're going to be selling the 130, 125 put spread. And again, that starts with our short strike at 130, which is about $5 below the market. So we're doing a pretty even and fair balanced trade here with about a 70% chance of success. There's a 70% chance that TLT stays between 140 and 130 by expiration. And the stock price right now is about 135, so it's right in the middle of that range. So we're totally neutral on Fed decision today when it comes out later on. We don't care what they say. Ultimately, whatever the market reaction is going to be based on the fact that they're going to keep rates low, and it's just going to be a lot about what their comments are going to be for future rate hikes, if any. But we think that volatility will contract for the rest of the month through October. And so that's why we're going to start building this position. We have all intents and purposes of putting more contracts on in TLT. We just want to see the market move a little bit more before we do that. And we just want to get that first position in here under the door, kind of, in the mailbox here today before the Fed announces today. So again, this position is a $5 wide iron condor on either side. We're taking in about $90 in premium. That means we've got about $410 of risk in this trade, a little bit less than what we would want to do, but it's one of these lower volatility trading strategies that we're trying to test out here from our back testing, and about a 70% chance of success 30 days out. Kind of fits a very kind of brick and mortar feel for how we're trying to do things systematically here at Option Alpha. And again, this is a trade that you can do in any account. You can do it in a margin account, IRA account, a retirement account, all of that stuff. It'll fit in there because it's a risk-defined trade.
Thanks for listening to the Option Alpha podcast. If you liked what you heard, please drop by iTunes and leave a rating or comment. Plus, you can get everything: free email updates for future shows, transcripts, video tutorials, case studies, and more. Just visit our website at optionalpha.com.
All right, I truly hope you enjoyed today's show and got at least one thing out of it that you can apply right now to make you a smarter, more profitable trader and investor. As always, you can get additional resources, any links mentioned in the show, and some related video training by going to today's show notes page at optionalpha.com/show64. Again, that's optionalpha.com/show64. Remember, if you'd like to get your question answered here on the podcast or live on Facebook and Periscope in the future, please head on over to optionalpha.com/ask. Click the big red button in the middle of the screen and leave me a private voicemail. Remember, there's no software to download or install, and it's incredibly easy to do.